Hey guys, Stock Saturday, and it's been a fairly quiet week, really. I'm down 1.2%, nothing sort of too much compared to the markets. Market's very flat as well. S&P up 0.5%, so I've done a little bit worse than that. No sort of huge surprise. Nasdaq is down 0.28%, so that kind of gives you an indication. I suppose my portfolio generally follows the Nasdaq a little bit more, being a bit more risky. So, but yeah, fairly small moves compared to sort of previous few weeks post tariff announcement. Yeah, it's sort of been relatively quiet across the board. We're sort of seeing some of these stocks consolidating around their sort of low points, really. BlackRock obviously got to about $800, but still sort of, 875, still relatively low. Evolution has been picking up a little bit, so that's quite good. Sort of obviously added a reasonable amount over the last sort of couple of months, really. So good to see them doing well. CME Group still sort of holding up really well, loving all this volatility. But yeah, some of the others sort of not really getting a huge bid. I didn't add anything in this portfolio at least this week, so yeah, still a reasonable amount of cash there. I don't mind it sort of earning 4.6%. Sort of annualized in daily interest, sort of a couple of quid a day. Just makes a nice little sweetener. So first out of the gate is TSMC on earnings. Obviously, this is Q1 earnings, and we had the tariff announcement starting on April the 2nd, so the very beginning of Q2. So a lot of people are sort of saying these Q1 results could be sort of juiced. You might have had pull forward demand potentially. There was talk of sort of semiconductors being quite heavily imported. So we'll have to see. And obviously with the tariffs themselves, you could get earnings drops quite significantly sort of going forward. So yeah, we maybe shouldn't take too much positivity around any positivity in all of these Q1 earnings that are now going to come out, because yeah, they are all leading right up to pretty much the day of the tariff announcement. So we'll have to see. But yeah, TSMC looking pretty good. Balance sheet they always do first, and cash continues to pile up. I suppose almost 2.4 billion or trillion new Taiwan dollars. That's 72 billion US dollars. Obviously, US dollar weakening a little bit, so those Taiwan dollars are worth slightly more since the tariff announcement. But yeah, up fairly significantly, up huge year on year, and yeah, all the rest of sort of current assets broadly the same. PPE, property, plant, and equipment. I do like to keep an eye on. That's up quite significantly, 3.4 trillion from 3.23. So very nice. They keep building, expanding capacity. As long as that demand is there, I say keep piling into it. I'm not really all that bothered about the dividend. I would rather they just, as I say, as long as demand is clearly there, expand and put it back into that. Admittedly, they're not doing this with a lot of debt. Current portion of bonds payable has barely increased, and long-term bonds increased by what is that, 22 billion Taiwan dollars. So that's basically nothing. Almost entirely, well, yeah, completely eclipsed by the increase in cash. So they're just doing this with profits, which is very nice. So coming over to their presentation, it's a little bit nicer to show the income. They also give you against guidance, so you sort of know that their guidance can be fairly well relied upon. They were showing 25 to 25.8 billion dollars in Q1 in revenue, and they got 25.53, so pretty much bang on. Gross margin was at the top end, pretty much of guidance. operating margin at the very top end, so very nice. And the main thing I look at is net profit margin, 43.1%, exactly the same as Q4. So that's very nice. Was 38% last year. So obviously profit itself is up very, very significantly from last year, 60.3%. Revenue, up 41% in so new Taiwan dollars is slightly different to US dollar revenue because of the change in currency, but 35-40%, it's all pretty good. Slightly lower than last quarter, but Q4 is a big quarter for them. Guessing that includes all of the iPhone revenue, obviously with Apple being their largest customer. So very nice. But yeah, 43.1% net profit for a manufacturing company. It's more than Microsoft, more than Meta, I believe. More than Adobe, people like that. Selling sort of pure software. There's nothing being built at all, pretty much. They have capex, I suppose, but they're not exactly sort of manufacturing. So I think that's really impressive. This must be one of the highest margin sort of physical manufacturing companies that I've seen. And then looking at their little breakdown, so 3 nanometer is slightly down on last quarter. Again, I think the 3 nanometer is sort of what goes into the iPhones and into Nvidia, I think, as well. But slightly down, I expect, from the Q4 launch of the iPhone. So everything else almost exactly the same. Just so that slight drop off in 3 nanometer. Expect that will be up quite a bit. Looking at Q1 2024, obviously it's tiny, so yeah, looking good. And sort of by platform, if this is on, compared to Q4, then no surprise, sort of smartphone is down. You probably want to, I think they normally do year-on-year comparisons as well, but they don't seem to be in here this year. But so I think comparing to last quarter isn't really fair to be looking at these too much. So looking at the guidance, I think if we're sort of talking about Q1 revenue being pulled forward, and everyone's saying Q2 is going to be bad, then the Q2 guidance is sort of all important in this earnings. And if we sort of get a good idea that we can trust their guidance, because they seem to be pretty much on it every single quarter, this is looking really strong. Revenue between 28.4 billion and 29.2, compared to 25.3 in Q1. As I say, we know sort of Q1 is often a weaker quarter for them, but I mean 26.8 in Q4. That is pretty crazy, really. And so that's up about sort of, again, 40% up year on year compared to Q2 last year. Compared to sort of Q4 last year, the strong one is up about 5%, so pretty good. And up about 12% from Q1 just finished. So yeah, really, really strong. I'm guessing that's all-time high revenue. So orders still coming in. Gross profit between 57 and 59%, staying as is. Operating profit between 47 and 49. So yeah, that is slightly higher on operating margin and the same on gross margin. So if we're getting a slowdown and sort of tariff knock, TSMC are not guiding it. So they'll have to sort of, reasonably badly miss this guidance, or Q3 onwards is worse for some of this to materialize. Otherwise, TSMC are weathering this extremely well. They did note in the outlook they've not seen any changes in customers' behavior so far. Uncertainties and risks from the potential impact from tariff policies exist. They continue to closely monitor the potential impact of the end market and demand, and they manage their business prudently. So, yeah, and they from 2024 to 2029, they're expecting 20% annualized growth in revenue, which is pretty crazy. Long-term gross margin to be 53%, which is slightly lower, so about 5% lower than current. And yeah, return on equity to be greater than 25%, which is a lot stronger than most companies. Had some sort of recent major events. They've noted, sort of basically totaled up the damage from the unfortunate earthquake as 5.3 billion Taiwan dollars. So that's, horrible to see them have that, but it's not been a huge loss at all. That's sort of 1% of revenue, about 2% of net profit. So not exactly huge at all. $4.50 cash dividend. I don't really, as I say, I don't really focus all that much with the cash dividend. A partnership with MediaTek, pretty good. They're a sort of 10% of revenue customer, I think, 8-9%. So that's good. And expanding their investment into the US to $165 billion from $100 billion, I believe. So Donald Trump is working his magic, I guess, or certainly his team. So yeah, there's obviously a risk that the more they expand into the US, the less the US may be willing to actually defend Taiwan, I suppose, which is why they, I think, try and hold the most advanced chips back, as much as they can to Taiwan, just to sort of make it indispensable, basically. But you start spending 165 billion in the US, they might just sort of think, well, even if China take over Taiwan, we've got our chips, so we'll leave it. But don't know. Obviously, this is quite a bit down the line. These will take years to build, but yeah, interesting point. So that was it for the earnings. We'll obviously have more coming up over the next few weeks, but it's quite a bit of news. We had CleanSpark coming out saying that basically they're not looking to be sort of heavy on the share issuance going forward. They're sort of basically saying price is a little bit low and they don't want to be hammering share dilution. So they are looking to take a 200 million Bitcoin-backed credit facility from Coinbase Prime. So you could say the hodl is essentially being diminished now because they don't really own it, if you like. It can sort of be taken away by Coinbase. But obviously, if price does well, they can pay that loan back in dollars with the Bitcoin, having risen in price. They could probably pay it off from income rather than sort of doing any monetary shenanigans. But yeah, interesting. It's sort of, I guess, a bit of a risk, more leverage, and it's debt rather than just shareholders taking the hit. Obviously, it's safer for shareholders to take the hit, taking on debt, and then going into the bad times is what put a lot of miners under, like Argo blockchain, for example. So yeah, but they're saying they hold 12,000 Bitcoin basically, and they thought they might as well do something with it. So yeah, not I guess not happy, not unhappy about that. Equinox Gold, I didn't cover this a couple of weeks ago. I didn't really sort of knock the price because I think people were expecting it. But the Los Filos mine in Mexico has been suspended indefinitely. They were sort of trying to sign a long-term agreement with 3 local communities. 2 were already on board, but the last one, I think they were hoping to get a deal done and sort of spend a load of money expanding this, a new carbon in leach processing plant, but they've said no. which is a little bit surprising considering where gold is at the moment. You know, the sort of I believe the town would have got a reasonable amount of income, and the government would sort of get quite a lot of income. So, yeah, a little bit strange. They've sort of not been including Los Filos ounces in their guidance, so it's taken a bit of a knock. Don't know whether they can potentially sell the mine or what can happen with it, but I wouldn't be surprised to see sort of these agreements suddenly, you know, restart with gold where it is, and yeah, maybe it comes back. A lot of people are saying they should just sell the mine, but that would seem a little bit of a shame. Never seem to get a huge amount of shareholder value out of selling these mines when they don't want them, because you know they're just not getting a huge amount of value for them. Where you know I was sort of hoping for 200,000 ounces a year at today's gold price, giving quite a lot of profit other than that. But there you go. I do just keep coming back to Equinox and thinking they're possibly one of the better value miners out there. They've certainly been lagging the bigger miners and the sort of GDX and even GDXJ, I think, not getting a huge amount of love. I don't suppose that Los Filos announcement particularly helps, but they are still looking at 1.2 million ounces in the future. They're sort of looking at 950,000 this year. But they have, assuming the Calibre project goes through, they have their Valentine Lake just off the coast of Canada, and that is looking at a 195,000 per year mine. So adding sort of 195 to that 950, and then probably another sort of 75-ish on greenstone, sort of takes them up to 1.2 million, which is very, very nice. They have sort of noted, I guess the analysts were expecting a resolution at the Los Filos mine rather than it being shut, because the analysts have put 2026 at 1.385 million ounces. So guessing they're not going to get there, but sort of almost to offset not getting there, you have to sort of remember they were using these forecasts based on what was the current gold price of 2,650, or no, I think it was closer to 2,950 when this came out, but the analysts sort of hadn't quite caught up yet and were still forecasting 2,650. And this was then they sort of gave the projection at what was Equinox's bull case of 2,950, and at the moment we sit at about 3,320. So any sort of loss in ounces produced is sort of being significantly offset by a much higher gold price. So they could still be looking at 2.4 billion in EBITDA next year. So I still think they look really, really strong. We're looking at sort of 5.5 billion in sort of the combined company market cap, and 2.4 billion in EBITDA. Obviously they have capex, a large amount of capex to go on top of that, and some other costs, but yeah, I think they look really, really strong. We are now starting to get some analysts sort of going a little bit crazy. Maybe they were sort of undershooting on their targets. A few months, even just a few months ago. Starting to wonder if they might be overshooting their targets now. Goldman Sachs has hiked its outlook for gold to $3,700 an ounce for the end of 2025. So another $400 gain in sort of 8 months. Within 8 months, the investment bank had hiked in March their 2025 target to 3,300. So in a month, it's gone up $400. And they do warn in an extreme risk case, gold could reach as high as 4,500 by the end of this year, which I think is, it's got a lot of people sort of hugely excited. I think that's probably unlikely to happen, both unlikely to happen, and you wouldn't want it to happen because something presumably would have gone majorly wrong. So unless you're all in gold, you wouldn't exactly be particularly well off, most likely. But yeah, you're starting to see some of these analysts put out some chunky targets. And, obviously people like Equinox would be absolutely smashing it if we got to 3,700. And it's not as if we're going to get a huge reduction in the US deficit by the looks of it. This sort of was the plan. So it's one of Scott Bessent's 3 points that he wants. 3 threes, they were sort of calling it. I think 3% increase in oil production, or 3 million barrels, I think it was. 3% GDP, and 3% deficit. They're currently at, I think, 7% deficit. And yeah, part of that, from what I understood, was trying to reduce defence spending. It's sort of obviously a protected sector of spending, but you had Doge and sort of various things. Elon Musk was saying that he could potentially find fraud and waste and things, and even in the defence budget. So not sort of cutting critical things out of it, but could still make some savings. And I think they were at 900 billion in defence spending, sort of for 2024 and I think 2025-ish, maybe a bit more than that. And Donald Trump has announced plans for a $1 trillion defence budget for 2026. He bragged about plans for spending larger amounts than ever before. We're going to be approving a budget, and I'm proud to say the biggest one we've ever done for the military. Not quite sure how that sort of plays against trying to cut spending. Nobody has seen anything like it, which he loves to say. And they sort of note he's made no mention of earlier claims that his administration would cut overall federal spending while cutting the annual deficit. And yeah, it's easy to see why you wouldn't mention those promises, as in recent days Elon Musk has backtracked from his claim that they would cut 1 trillion out of the federal spending. The new figure offered by Musk is 150 billion in savings. So that's about 2.2% of total federal spending, or not a huge amount. And obviously, if they make 150 billion in savings, the defence budget is going up 100 billion. So, yeah, overall, we're still getting a large deficit, and that would do wonders, I think, for gold, Bitcoin, and probably even stocks. So, a little bit crazy. Bit of a positive is that this doesn't seem to be doing a huge amount to inflation, even the tariffs. We've got Trueflation numbers sort of since the tariff announcement came out, and yeah, it's sort of hanging around 1.3 to 1.5%. So yeah, whether there's a lag that hasn't come into these numbers yet, we don't know. I was sort of kind of expecting a little bit of a spike, maybe even up to just the reported rate of 2.4%. I think they have core inflation at sort of 2.8%. So yeah, 2.4 on the headline. The headline sort of compares to Trueflation, I suppose. This includes food and energy and that sort of thing. You can look at core and see that is well on the way down as well. They have core at 1.97 and services, 2%. Everything's 2% basically, except goods, which have gone negative, 0.04% in the negative. So that's what's bringing these figures down. But it is good to see, core and services both at 2%, which is the Fed's goal. So whether the official numbers, continue to come down and follow these numbers, where people are expecting a rocket up in inflation, we'll have to see. And so, a bit of economic news. We had the UK job figures come out. Very, very strong, really. 206,000 increase in jobs over the last 3 months. Claimants for unemployment, 18,700, quite a bit better than expected. And last month's number was revised down from 44,000 to 16. I'm not quite sure how it's possible to get it that wrong, but yeah, there you go. And unemployment rate has stayed at 4.4%. It was expected to, same as last month. So we don't look like we're doing too bad. We got UK inflation as well, lower than expected, 2.6% on headline, and core stubbornly still at 3.4%, is down from last month, but is well above 2%, and doesn't seem to be able to get under 3 even. So a little bit frustrating. Retail sales for the US sort of broadly in line with expectations. Nothing too much there. The ECB, off the back of some pretty good inflation numbers, has lowered their rates, 2.4% on the main rate, down from 2.65. So they are very low compared to everyone else. Good for them, I suppose. US job numbers looking pretty good as well. 215,000 for the last week, and sort of 1.885 million on continuous, so a little bit higher, but nothing too much. That was about it. And portfolio wise, as I say, not a huge amount of change in here. Didn't buy anything, and prices sort of haven't really moved all that much. Crypto sort of staying in a reasonable range, has sort of popped up slightly at the end of this week. It's sort of showing quite a bit of strength, I would say, compared to S&P and the Nasdaq. A lot of people still say it's sort of leveraged stocks basically, and it's down from the peak, about the same as the Nasdaq at the moment. So yeah, that sort of kind of goes out the window a little bit. Volatility has come right down, and it's looking a little bit more, slightly more safe haven. Obviously, it's not, true safe haven yet to most people. It doesn't, correlate all that much with gold, but over the long term, I think it does. So yeah, looking good. And gold itself, just as I say, smashing it, $3,340. So yeah, looking crazy. On the Interactive Brokers side, it's sort of helping Pan American Silver along, 27.20 now. KGHM, I thought would be doing a little bit better. Copper sort of up and down, but still looking good in the sort of 450, 460 range. And yeah, the option side has been extremely quiet this week. Sort of not a huge amount of move in any of these. Did buy a little bit more Hive. This is still a sort of juiced number. It'll come down by a couple of hundred or so in a couple of months when the June expiry ones come to expiry. And I bought a little bit more herein as well. Still thinking they look solid. But we do need something to happen on the crypto side. But I think it will relatively soon. Still a fair bit of cash to deploy, and I haven't put in my 5,000 or so in just yet. I haven't seen anything sort of that's made me want to pile into anything more. Kind of tempted to, if I don't end up buying any more options, to just put up more into KGHM, because I do think they'll do well with the copper and silver combo. So we'll see, but I'll maybe sort of make some decisions in the next couple of weeks. I'm sort of struggling to at the moment, but leave your thoughts and comments below, how you guys are doing, and like and subscribe. See you soon.